Hello and welcome to the Daily Finance Wrap with me, your host, Kushal Bhagi. It's great to have you with us as always. And by now, you know, this is a 30-minute bulletin. We bring you the market wrap, we bring you top stories from the world of personal finance. And we also, as always, in our main segment, speak to various guests on interesting topics that can help you better manage your personal finances. And today we're on a hot topic. We're going to be talking about investing in cryptos. You know, if you've been in the markets, you would have pondered this question at some point of time or the other. Do I invest in cryptos or not? And some of you may have already done so, but many of you all may still be hesitant because it's not something that you fully understand. Maybe today's the day to change all of that. We have an insightful chat lined up later on in the show with Zakhil Suresh of Bitsave, and we hope to have a crisp discussion and address aspects like whether you should invest in cryptos or how can you invest in cryptos. So definitely stay tuned for that. And of course, if you have any doubts or if you have any queries, make sure to get them ready, put them in the comments section, and we'll get Zakhir to answer them live for you. That's a little later on, so be ready for that. But before that, let's start with a few of today's top financial stories. Yes Bank is one of the 45 new stocks to be added to the futures and options segments. But unlike many of the other newcomers, this marks Yes Bank's return to the F&O market after a 4-year absence. Yes Bank was removed from the F&O segment, if you remember, in May 2020, following a series of financial troubles where the bank was placed under a moratorium and the RBI had restricted withdrawals to 50,000 per account for a month. In March 2020, Yes Bank was also removed from the Nifty 50 index. And the same year, little later on, the bank was rescued by a group of lenders led by State Bank of India. Flash to today, Yes Bank's deposits grew 18% from last year, while advances remained flat with a 1% year-on-year growth. The share price today closed at 19.96. That's down almost 11.9% year to date. Enviro Infra Engineers made its listing debut today, and it listed at nearly 50% premium over its IPO price of 148 rupees. The listing gains far exceeded analyst predictions. They had estimated a 15 to 35% premium. If you remember, before the listing, the grey market premium for the IPO was rupees 57, and the expected listing price was 205 rupees. On the NSE, the stock opened at 220, which is almost a 49% premium. On the BSE, it listed at 218. That reflected a 47% premium over the issue price. The share finally closed at 207 today, which is up 40% from its IPO price. Now, Enviro Infra Engineers is in the specialized business of sewage treatment solutions, and the 650 crore IPO saw strong response during its 3-day subscription period. The Finance Ministry has proposed increasing the foreign direct investment limit in domestic insurance companies from 74% all the way up to 100%. Now, the ministry suggested that insurers would be allowed to offer all types of insurance, including life, general, health policies, all under one single entity. Remember, at present, life insurers cannot sell health insurance and vice versa. Now, the ministry also recommended reducing the minimum net own fund requirements for foreign reinsurers to 1,000 crores, down from the current 5,000 crore mark. And it did talk about empowering the IRDAI as well to set lower capital requirements that would start from 50 crores, and this would be for companies operating in underserved areas, but that would be on a case-to-case basis. The last story of the day, according to rating agency ICRA, the organized gold loan market is expected to exceed 10 lakh crores in the current financial year, with projections to reach over 15 lakh crore by 2027. Now, this sector is growing rapidly, with gold loan dispersals jumping up by 51% in September alone, vis-a-vis personal loans, which saw a much slower growth of just 11.5%, although, of course, that's of a much larger base. Why are gold loans becoming a popular credit option? Well, this growth is driven by the loan speed, flexibility, and affordability. And experts believe that it is these advantages that make gold-backed loans, an appealing alternative to personal loans and credit cards. Finally, just a quick check of the markets, a quick look at what the markets did this week and today. The Nifty 50 closed up 216 points, absolutely flat for the week. Marginal gains in the mid-cap 150 up 0.25% today, flat for the week as well. The small cap 250 indices closed at 17,709. That's up 2.5% for the week. And in fact, all 5 days of the week, it closed in the green. That's a look at the top stories and the market actions. Let's move over to the next segment of the show. Now, if you've been following the US elections, you know that Donald Trump is a big fan of crypto. How big a fan exactly? Well, he set up a task force to help cut government spending. You know, the one comprising Elon Musk and Vivek Ramaswamy. And he's called it the Department of Governmental Efficiency, or Doge. And that's after his favorite Bitcoin or his favorite crypto, Dogecoin. And the markets have responded. The price of Bitcoins are up 37% in the last month itself. Is it then time to take this asset class seriously? Is this asset class here to stay? Well, to help build our understanding on the topic, let's welcome Zakhil Suresh to the show. He's a founder and CEO of Bitsave. Bitsave is a startup that offers passive crypto investment products. And Zakhil, we definitely want to understand what that is. But before we come to that, let's start with the golden question. What exactly is cryptocurrency? And how exactly does it work? Can you just help break it down for our viewers, some of whom might be wanting to invest in cryptos for the first time?
Sure, sure. First of all, thanks for having me, Kushal. And crypto, I think let's just take a step back. There are and look at what blockchain is, because that makes that conversation a bit more easier. We are all used to centralized databases for a very long time. What I mean by centralized databases is that let's say your bank has a database, my bank has a database, Google has a database, Facebook has a database, right? But even though some of them are linked, we always were relying on a centralized party to authenticate that information. What blockchain made possible is blockchain is actually the first database that is not controlled by a centralized party, which means that it's controlled by a community. You can think of it something like a Excel sheet, which all of us can see, but no one can individually go and change our information in that. It has to, I mean, if we have to make a change, everyone has to agree, which means no one can sort of manipulate the data in that particular Excel sheet. So that is what blockchain is all about. And this actually made two things possible primarily. One is taking that need to trust a centralized party away. Secondly, it also made it easier to move money globally, freely. Because let's say if I'm sending you 10,000 rupees, and both of us have two different banks, now there is, both the banks have to communicate with each other before completing that transaction. But if it's done via blockchain, where everything is, on a single database, it sort of moves more efficiently. So this is what a blockchain made possible. And now when you come to crypto, every blockchain that exists has two separate sections. One is a use case, one is a software. Every blockchain exists for its own use case, just like every company exists for its own reasons. So one part is the software and the second part is the currency, right? For example, let's take Bitcoin, which is the largest crypto asset in the world. We have a Bitcoin blockchain, which has the software which lets you do things like able to store your wealth in a digital format. You can move money without relying on a centralized party. So that's a service that Bitcoin software provides. And in order to access these services of a blockchain, you cannot pay in INR, you cannot pay in dollar. You need to pay in the currency of that blockchain. So basically, if you want to access services provided by Bitcoin blockchain, you need to have Bitcoin with you, right? So these are the two different aspects of a particular blockchain. And if more people want to have services of the Bitcoin blockchain, you need to have more. That's how the demand for Bitcoin increases. Similarly, you have Ethereum. So the service provided by Ethereum blockchain is something like, it's like a decentralized app store or a decentralized Play Store. You can go and deploy apps over there. So if you want to avail services of these applications, you need to pay in the currency of that particular blockchain, which is Ethereum, right? So these are the two different pieces here. And this is what drives the demand of a particular cryptocurrency, which is, let's say, like a Bitcoin or an Ethereum. If more people want to access that service which a blockchain is providing, you have to go and buy more of that particular currency, of that particular blockchain. So that is what sort of drives the value and growth of these particular blockchains. Sorry, of these cryptocurrencies.
Well, that clears so many things for me, and I'm sure it does for many of our viewers as well. Tell me, Zakhil, what makes crypto a really interesting or attractive asset class? Obviously, the returns, right? That's what people are after. You want to talk to us a little bit about the returns that early adopters would have made who invested in Bitcoin and crypto, rather, and also touch upon a little bit about the volatility of this asset class and the kind of drawdowns that a typical investor might have experienced or can look to experience maybe if they invest.
Yeah. So I think it's investing in at an early stage of Bitcoin or Ethereum for that matter. It was similar to investing in something like a Swiggy, or imagine buying or investing the first stage of Swiggy's round, right? Or any company that went public, or any startup that went public. So it's just like a startup. If you actually look at it, it all starts an experiment. It all starts as a solution to a problem that is existing. And some of these blockchains, some of these cryptos have gone to become big, like Bitcoin, Ethereum, and so on, and a bunch of others. But there are a few others, which did not really scale, or did not really meet the purpose, right? So it was similar to that. Of course, the people who bought Bitcoin like 10 years, 15 years back, they've made a fortune. I think the last 10-year gain is over 10,000% when it just come to Bitcoin alone, right? So it's like I said, it's like buying startups, but imagine these startups' equity shares are getting listed publicly on day one itself. Where the team is just 10 people, where there's no product that is ready. But then imagine the kind of volatility that would bring to the share of that particular startup. For example, if Bitsave, our shares are going to get listed today, and with every single news, there will be a lot of volatility up and down, right? Because that's how it's volatility is more of it's not really linked to the asset class itself, but it's mostly bought by the market participants who are coming in, buying and buying and selling these stocks. So it's similar to that. Historically, we have seen Bitcoin drop 70% 7 times. That is over the last
Okay.
15 years. So that's a sort of historic drawdown this asset class has had. And when you sort of look at the other cryptocurrencies, actually way more. Some of them, Solana sort of dropped more than 95% in the last bear market, and now it is up, like some 20x from that point. So it's primarily because of where the stage in which these projects are. So yeah, that is in terms of the volatility and the drawdown, which people need to be actually mindful about. So look at it as that hot sauce in your portfolio. You don't want to have a lot of it, because in that case, it can have a very negative impact on your portfolio, because it's highly volatile. But because of the returns that is offer, if you have like a single digit percentage allocation into any of these assets, I think that will play a good role in your overall portfolio mix.
It's easy to say, fill it, shut it, and forget it, but it's really hard to do, isn't it?
Right. But see, I think asset allocation isn't something that, I think that's the right way to look at it, right? You always look at the return and risk associated with any asset. That's how you sort of arrive at how much you should allocate, right? So if you're someone who is not comfortable with a particular, people say I'm not comfortable with 50% drawdown, 70% drawdown. So maybe then
Yeah.
just have 1% of your portfolio into crypto, so that even if it drops 80%, your overall portfolio is not really going to be affected, right? So I think that the right mix of asset allocation would sort of be helpful in case you want to have access to this asset class.
Yep, that makes sense. Tell me, Zakhil, let's move on to a slightly different aspect to look at cryptos. And this one is more about regulation and legality. Okay. The first question I want to ask is investing in cryptos legal in India? And a follow-up to that is, what about the current regulations in India around the crypto space? How do you see these evolving? What are they at present? And how do you see it evolving? If you could just touch upon that.
Sure, sure. I think like a lot of people actually think that buying crypto in India is not legal, but there's no law which states, in India right now that buying, selling, transacting in crypto is illegal, right? So it's
Okay.
safe to say that buying crypto, holding crypto, selling crypto, it's completely legal in India. The only remark that once came from the government is that it's not a legal tender, which means that if you start using it for daily purchases, transactions, there's no law that protects you. For example, let's say if I pay someone in INR, and then if we get into a problem, I can always go and there's some recourse that is available
Correct. Correct.
for those particular purchases that I made or payments that I made, but you won't really get any of those advantages if you end up paying in crypto. But I always say it's always you should always look at, maybe go back 10 years and look at how things evolved over the last 10 years, right? For example, when I started, there was absolutely nothing, it was just one RBA circular which said that maybe you should just be cautious when you access these particular assets. But right now, we have proper guidelines for taxation. Everybody is clear how exactly to report these particular transactions in your ITR, what the tax percentage is. There's a TDS that is applicable to sort of track every transaction that is happening. And I think the most important development has been all the service providers that deals in crypto right now. They all come under the Prevention of Money Laundering Act, just like any other bank or NBFC in this country. So every AML guideline, every CFT guideline, that's all applicable to the service providers that are dealing in crypto as well, which means the ecosystem is a lot more safer and cleaner at this point, right? I mean, so there are strict checks in terms of what kind of money is entering into the system. The same level of KYC requirements that a bank is deploying, that's the same thing that all the service providers in this country who are dealing with crypto are also required to. It's not an option anymore. There's a law which says that you have to do the same thing. So it
Hmm.
has become a lot. I think that is how things have changed over time. And talking about future, I think we already we are hearing that there's a framework that is being created by the government. We are awaiting the first draft of that, and I think it will evolve as an asset class and not really as a currency as it was originally designed for. I think
Mhm.
every country has their own way of regulating or creating a framework for a particular technology, right? So the same way, I think, considering we have a lot of restrictions in terms of capital flight in this country, it's less likely to be allowed as a currency or a payment system, but it is more likely to be allowed as an asset class which people can access, probably with some level of restrictions on how much you can invest every year or something of that sort. But I think uh, but over time, if you look at every 5 years how things have evolved, it's always been positive. And I think uh, next if you you know if we go next 5 years down the line, I'm pretty sure we're going to have a proper regulatory framework which sort of protects everyone who is investing into this asset class.
Okay, that makes sense. But tell me something, Zakhil. How much of a concern really is security? Anyone in the news, for example, recently was Erex, right? It's a prominent exchange that's been in the news. There's a loss of $230 million on that exchange. People look at these headlines and then people wonder, is that money really gone? Have investors really lost money or lost capital as far as that's concerned? One can accept price volatility when one is investing in an asset, but for somebody to come in and hack your account and steal your money, is that a reality? I mean, how do you look at these hacks and security breaches? Is there anything that one can do to avoid getting into these kind of situations?
Sure. So see, it's an asset which is designed for you to own yourself. As in, it's actually an asset which you can own without a third party risk. If you ask me, it's similar to buying gold and storing it yourself, right? So if you go to a jewelry and buy gold, So I think you basically have two options, right? One, you can keep it yourself, like you can have a locker at your home or in your cupboard, where the responsibility to keep it safe is on you. And we often hear, your gold getting stolen from your home, right? Because maybe you were not really storing it safe enough. And some people sort of put it in a locker, which is provided by a bank or a custodian, for that matter, which is relatively safer because you have a system that is designed to protect your assets, right? And then you pay a locker fee or locker rent for that. And even then, you've had cases of lockers getting compromised and gold or cash getting stolen out of it. So the same sort of risk exists for crypto assets as well. So let's say if you are custodying it yourself, which is the way it was designed for, you need to ensure that you're following all the safety standards. It's basically a password. It's owning Bitcoin is like owning a password, and if you store that password somewhere where someone else can have access to it, then there's a potential threat to it getting stolen, right? So it's important to make sure that you store these assets in a way where it's less prone to someone else having access to it if you're doing it yourself. If you're relying on a third party, it's important that you do it with a qualified custodian who has all these systems in place to protect you, in terms of, let's say, to protect these cyber hacks, or maybe also have some level of an insurance coverage also in place where it sort of, in case something goes wrong, it sort of covers for that. So I think this is how you mitigate this risk. Anything on the internet, there's always that cybersecurity risk, right? And the way to mitigate it is using the best technology out there, using a service that is reliable or have a pretty good track record of protecting these assets. So when it comes to crypto specifically, what we usually tell our clients is you have three options. I think it's more of a compromise uh, on convenience. It's basically security versus convenience when you move through these options. One is obviously the self custody where everything is on you. Second is using a qualified custodian where there's a system in place to protect your passwords. Third is leaving it on an exchange, like an exchange that you were mentioning, which would be the last option. It's the most convenient option because you can always have that liquidity ready. But that's the most when it comes to security, that's the least secure option. So there's a compromise that you make. So yeah, so primarily it's a bit complicated, but do it that. But if you find it hassle, then obviously you have which are which like qualified custodians that are designed to protect these passwords for you.
Okay. Zakhil, let's talk a little bit about the buying process. Suppose I am sitting over here, I want to invest in Bitcoin. How does one actually go about it? How do I know which are the coins that I need to invest in, or which are the exchanges that I want to do so? You want to just take us through a 3 or 4 step simple process in terms of how one can actually go about and buy cryptos? Well, I think we've lost Zakhil a little bit over here on the show, and we'll wait for him to maybe join back. It does happen sometimes, you get these technical difficulties, but I hope you all are enjoying this conversation. And if you do have any questions, make sure to put them in the comments box. And once Zakhil is back, we will look to answer these questions as well. But what we're getting from the conversation so far is that crypto is here to stay, and it is all about asset allocation at the end of it. There is maybe some amount of your portfolio that one can look at start investing with cryptos. Of course, Bitcoin and Ethereum, he mentioned, are the major cryptos that are available today, and that should be a part of your portfolio. But we also spoke about not just how much returns they're able to give, and the outlook might seem quite positive, but there's also a fair amount of risk that is associated with cryptos as well, right? He said we've seen drawdowns of 70 to 80%. 7 to 8 times. And actually, it might sound all right in hindsight, but if you actually want to live through that entire process, then it's not very easy. People find it hard today to invest and stay invested in direct equities. People find it hard enough to stay invested in the Nifty 50, and the Nifty 50 does not experience the kind of drawdowns about 50, 60, 70%, on such a regular basis. So he did mention that, you should think about cryptos as investing in early stage companies. And with early stage companies, you don't know the outcome, whether these companies are going to last, whether they're going to go bust. It's something that one really has to have the gumption, right? You have to have the gumption to be able to deal with it. So I think majority of your money as an investor still probably goes into equities and mutual funds and all of that. But maybe a small percent, depending on your risk appetite, can go into cryptos. Okay, we're still waiting for Zakhil to come on board, and we're still waiting for some of your questions as well. We talked about also, I'm just recapping some of the stuff till we get Zakhil back on the show. We also did talk about a little bit of the legalities. And what we're saying over here is that India doesn't have a real stance as far as the legal nature of cryptos is concerned. Regulations are expected to come in. So currently the space is not regulated as yet, but regulations are expected to come in. There is a consultation paper that the government and the people are working on. But what it means today is that there is no recourse in case something goes wrong. Like when you invest in equities or when you invest in mutual funds, if something goes wrong, you can go and you can get in touch with SEBI, and SEBI will come and sort that out for you. Maybe that level of recourse isn't available today just yet. So from that perspective, it is a little risky. But from an overall perspective, from a global perspective, if you look at Donald Trump as well, who is, like I mentioned, he's such a big fan of cryptos. In fact, it might surprise you guys a little bit, but he did accept political contributions to his presidential campaign in cryptocurrency as well. So, that is definitely going to be a big part of his agenda, and that's going to be a big fillip to the industry as well at some point in time, in the near future. So there's still a fair amount of work to do as far as Bitcoin is, as far as cryptos are concerned. If I can go and talk about a little bit about the taxation part of it, right? And let's talk about the liquidity and taxation associated with cryptos. With cryptos, is 30% flat capital gains tax. Okay, it doesn't matter whether it's short term, whether it's long term. And in addition to this capital gains tax, there is 1% TDS as well every time you sell. Okay, so that's a common tax structure that goes across all cryptocurrencies, and that's why there is low liquidity. So, I think we're just going to run into a couple of promos. Let's wait and try and get Zakhil back to close the show and be with us, and put all your questions in the comments box. I'm seeing a couple of questions come through already. We'll be right back.
What's the number of credit cards that you've got?
10 can be a number that we can use. I don't use more than 10-15% of my total.
That's it. Are viewers out there who want to understand the spectrum of expenditure, which is most rewarding?
The highest I've ever got is about 33.3%. And all our flights and hotels were 80% paid by my reward points.
How hardcore do you have to be into knowing all of this?
You could go as deep in it as possible. You'll end up in a rabbit hole and end up spending a lot of time and effort for unproductive returns, honestly.
I want to get to that actually.
Yeah.
Let's talk about that.
Zakhil, welcome back. Are you with us now?
Yep. So sorry.
All right, no problem. I held the show, I think, by the time you're not there, but it's good to have you back. Zakhil, we spoke about the buying process of cryptos, and before that, and we're getting a fair amount of questions as well. But I want you to tell me a little bit about Bitsave and what is it exactly that you guys are offering. How is investing through Bitsave going to be a better experience for somebody who's looking to invest in cryptos for the long term? Want to touch up on that?
Sure. So, like in 2021, especially after the COVID boom, that is when we realized that there's a problem that is happening, or that is sort of growing in the crypto ecosystem of a major issue with asset selection. So back in 2017-18, when we started actively trading or actively investing, we just had like 5 assets, 10 assets that we can trade or buy. But by 2021, it was like 100, 200. Some of the exchanges sort of having like 500 plus listings. Right now, for someone who is still figuring out how to access this asset class, or what is this asset class all about, for someone like that to come onto an exchange and then see like 100 tokens, and they have no idea what these things are. Maybe Bitcoin they've heard about it at some point, but they have no idea about anything else. They were not really able to make the right decisions. When I say right decisions, some of them just ended up buying things that you see on social media or whatever, right? And you end up losing money because most of these tokens are narrative driven, which means that what looks good today may not really exist maybe after 3 months or 6 months. So it was really affecting the long term investors. Maybe short term you still have time to sort of enter, exit, and all that, but someone who is looking to allocate to crypto for the next 5 years, 10 years, they were not really making money, because you end up allocating to these random projects that are hyped up, and after 2 years they're not available, right? So we wanted to solve for that, make it more investable, make it more easier for people to access. So we looked at how things are, how the equity industry sort of solved this, right? For example, index funds, or or large cap mutual funds for that matter, have solved this to some certain degree. Because if I want to have access to equity, I just put that money, and then let's say the fund manager or the asset manager take care of the rest, right? For example, if you're tracking an index, they just allocate to the best companies that are out there, and for a fact that over time the index will do well, because it will have the best companies in, and the not so good companies go out. So we wanted to replicate that model to make sure that everyone sort of have an easier access to this asset class. So we went to Bloomberg and said, see, you guys have an index that similar to what a Nifty 50, or like an S&P 500 that we have for stock. Bloomberg has a crypto index called Bloomberg Galaxy Crypto Index, and we said, why don't you sort of give us a license to go and build a product out there where people can have access to the large cap crypto assets that are selected by Bloomberg in a very simple manner. So that is how we got started last year, where we launched the Bitsave app, which lets you invest into the top crypto assets that are part of Bloomberg's crypto index. So yeah, it's primarily a passive only investment platform, where, let's say, you are someone who don't really have the time to figure out what these assets are. You don't have the time to research and understand what the new trends are. So let's say, and then you just want to have 1 or 2% of allocation to crypto assets in your portfolio, right? And then you come to Bitsave and just allocate that, and then we take care of the rest. Second piece would be the fact that we store all the assets in a qualified custodian, like I was mentioning before I got dropped off. For example, if you find storing assets yourself is hassle, and you don't really want to get into that, then the next safest option is to store it with a qualified custodian with insurance in place. So that is something that we use. So we act as sort of like an asset manager who converts your funds to the top crypto assets and stores it in the safest way possible. And as and when you want to liquidate it, take it back to your bank account, we always, we are there to help you do that. So that is what we do, just making it extremely simple for a passive investor to add crypto assets to their long-term portfolio.
That sounds very unique, Zakhil, and I wish you all the best for that as well. But we're not going to let you go just yet. As promised, we are going to take some questions, and we have a fair few of them that have come in from viewers that are watching. So, Sarvaga is asking, what is the minimum amount that you need to start investing in cryptos in India? And can students or people with small savings also participate? Any minimum amount that you need to start investing?
So on Bitsave, it's 1,000 rupees. You can, in one of our offerings, you can start with as low as 1,000, or you can set up a monthly SIP on Bitsave for as low as 1,000.
Okay.
And I'm pretty sure there are a bunch of other platforms that lets you start with as low as 100 as well. right? So
Okay.
yeah, so look at that as the minimum barrier to start, and there's no other requirement. I think you have to be more than 18 years, obviously, but other than that, you can just sign up, do a basic KYC, and start investing on in any of the cryptos that you want.
Ashray Jain, one of our other viewers, has said start by investing small now and build up for the long term. All right. Harshvardhan Sharma has an interesting question. He's saying, how do you deal with the FOMO of not having invested enough 1 month ago or even 6 months ago? Where do you see the price of cryptos or Bitcoin? Let's talk about Bitcoin because it's a specific coin going somewhere in the future.
See, I mean, everyone has their own predictions,
Sure.
right? So that's how it is, and I generally don't try to do that because for us, it's about because see, first of all, no one can actually predict the future. So when someone asks me where do you see the price at the end of 2026 or 2025, I don't really know, but what really matters is whether this is going to grow as an asset class, whether more people want to have access to Bitcoin in the next years, right? So the one way to look at it is if you're comparing Bitcoin with gold, for that matter, and Bitcoin is sort of like a digital version of gold because it has the same characteristics of gold, but it's in a digital format, and it's just more efficient. When I say efficient, moving gold is very difficult. It's costly. It's impractical if you're trying to move large amount of gold. But if I want to send you 1 billion worth of Bitcoin, I can just do it in 10 minutes with maybe a couple of dollars in fees, right? And historically speaking, and if you look at it, gold is right now at 18 trillion market cap, and Bitcoin is around like 10% of that. And if you look at the history, there is no digital version of something that is more efficient, that has stopped at a 18, that has stopped at a 10% penetration. For example, like if you look at digital ads, right now that takes up most of the ads industry compared to print ads. The same in case of media, right? So that's how if something is more efficient, if the digital version of something is more efficient, it has always grown to be a larger market, market percentage, instead of just settling at 10%. When was the last time we wrote a letter, right? Because we all are just used to sending emails and messages right now. So if you compare that way, then you get a sense of where the price is going, right, over the next 5-10 years. So I keep saying, we are in that, we're moving from that dial-up to broadband phase that we had for internet. It's similar. It's a similar phase for crypto right now. If you remember, it was the UX was hard. I mean, connecting to dial-up was extremely hard. It was slow, but right now we don't really care, right? So it's the same way. Using crypto is a bit difficult right now. The UX has to improve, but I'm pretty sure 5-10 years down the line, we all will be interacting with blockchain and crypto without even realizing it, right? I mean, recently there was this announcement made by NPCI on Finternet, and that entire system is built on blockchain technology, and I think the pilot is being run on Solana blockchain, right? So we all will end up doing that. And when you look at like I mentioned initially, if more people want to have access to these software services that is provided by individual blockchain, and the only way to access it is by investing or buying more of that cryptocurrency, uh, definitely the price has to go up, right? And when it comes to FOMO, what we keep telling us, just start. It's always about having some allocation to crypto, uh, instead of having nothing, right? Because it can go either way. It's still an experiment, I would say, but if it works out, it's going to do wonders to your portfolio, right? So it's never too late, and it's always good to have at least that 1% of your portfolio allocated to crypto.
Amazing, Zakhil. I think you've answered a couple of other questions as well in that answer of yours. So we've come to the end of the show, but listen, thank you so much for your time and wish you all the best.
Thank you, Kushal. Thanks for having me again.
Right, and to the rest of our viewers, I hope you enjoyed that conversation. Make sure to subscribe to Personal Finance TV. Stay tuned for some more personal finance content. And remember, the Daily Finance Wrap goes live every weekday at 5 p.m. Thank you very much for watching. That's a wrap.